We're going to talk about volume profile and determining where the market structure is, and then how I can use that to my advantage to tell whether or not there's support or resistance in a particular area. And so just knowing that can help you make those type of decisions, those sort of nuanced decisions. Should I hold on or shouldn't I? Market seems to be finding some support there. If that's the case, then I can hang out for a little while. And if it breaks that support, then I know that I have to make a quick decision. So it all comes down to knowing exactly where those levels of support or resistance are, areas of liquidity and lack of liquidity. And the volume profile is fantastic at showing you exactly that. So what I'm going to do is I'm going to show you how we look at volume profile and how it tells us where support and resistance are, where liquidity and no liquidity, and then how price tends to move or behave in those different areas. Now, this is probably very different than what you are familiar with volume profile, how it is generally taught. Most people are talking about volume profile in terms of sessions, and so they'll look at the session profile and the different shapes of the profile, or they'll look at the nodes, but they're not looking at it from a historical point of view, or what we call market memory, and it's actually not what we call it. This is a concept that was brought forward by a very famous mathematician named Benoit Mandelbrot. You've probably heard of Mandelbrot sets or fractal geometry. He's a pioneer, or was a pioneer, long gone. I think he passed away back in 2005 or something like that. But he was quite impactful in the things that he found. And one of the concepts that he came up with or recognized, not only in financial systems, but in all natural systems, besides the fractal geometry, which is also has wide application, was this idea of system memory. And that is one of the things that he illustrates this with is floods and flood zones, and how over the millennia or over decades, those flood zones tend to repeat themselves at very, very specific levels based on where they were before. And it has a lot to do with a whole variety of factors that, how the water and Earth tend to carve out spaces that then tend to repeat themselves. Imagine this, or another way to look at it is with your own body. Let's say 10 years ago that you got a cut, right? And that cut caused a scar. And then 7 years had passed. And you know that because our body is continually replacing all the cells in it, every 7 years, we completely replace all the cells in our body. So imagine that scar. Every cell that is around that scar has been completely replaced, yet the scar still remains. So there is memory even in your own body. But you can say the same thing about markets. Imagine that the change in volume at different levels is kind of like a cut in the market. And so as time goes on, those cuts in the market, they persist. Those areas where there's a big transition from high volume to low volume is kind of like that cut. So those areas of huge change in volume, they will last over a long period of time. And you can look at them through the volume profile. The volume profile makes them stand out dramatically. And by just identifying where those cuts are in the market, they have an effect on current price in the present day in real time. So that's something that differentiates analysis from all the other types of indicators that you're probably used to looking at, trend lines and moving averages, which are all based on very small subsets of data, and they're looking at things that are looking at the past. So while we're also looking at the past, they are calculated, and then you're supposed to make some sort of interpolation about what that is talking about in the future or in the present. Where with volume profile, we're looking at these scars in the market, but they are in that exact location in real time. And so if you had that ability to be able to see where all these different levels were in real time and actually see how the market is reacting at those levels, that would be a huge advantage. And so that's what we use when we're in that profit zone, in that profit tent of the butterfly, to help us make nuanced decisions or support resistance decisions, or should I hang on or should I get out based on the profile. So that's why the profile is so important to everything that we do in our profit management part of our strategy.